following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the September 5th, terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call As Within, So Without. Have you ever thought of yourself as living in two worlds? I'm here to tell you it's true. We inhabit both an inner and an outer world. Typically, we develop a preference for one world over the other. Some people turn almost exclusively to the inner world, while others direct their interest towards others. Like any great recipe, we need ingredients for both because this becomes the recipe for happiness. You see, happiness lies in the development of our two worlds, our outer and our inner. And I'm not talking about belly buttons here. You see, question. Here's the question. Do you believe that folks that seem to have it all on the outside have it all on the inside? How about folks like Oprah or Bill Gates, Warren Buffett, Mark Zuckerberg, all kinds of folks you can actually come up with out there? My experience is this, is that regardless of how good life appears to be on the outside world is not enough to support happiness. And just the opposite is true. You know, there are folks that have it all together on the inside, and they miss out on all of life's experiences on the outside. Everyone needs balance in order to obtain happiness. The door to success, folks, it opens from within. I say, go find your balance and then unleash your power within. You talk about unleashing the power within. We got to unleash it right here, right now. We have 3 hours to go in order for you to sign up for the TFNN virtual competition. $10,000 in cash awards, 70 total prizes, 10 overall winners are going to receive cash up to $3,000. You got 10 runner-ups that are going to get an autographed copy of the best-selling book, The Art of Timing the Trade. 5 randomly drawn winners each day beginning next Monday. 5 people each day going to receive $100 just simply for signing up for the contest and placing a trade. Doesn't matter whether the trade is a profitable trade or not. Now, here's the key. You've got to sign up within the next 2 hours and basically 50 minutes out there, because at 12:01, it doesn't work. The system is automated. So I know there's folks that have been sitting out there, they're sitting on the fence wondering, should I go do that? Look, let me tell you the other benefits, and it really was just brought to me by the attention of Ed in the den. Ed said, Steve, I did not know the den has a much better looking display. Wow, and he's really referring to the charts out there. If you'd like to see any of our charts, you know, if you're watching on TigerTV, that's a wonderful thing. We absolutely appreciate it. But right now, you can go ahead and join the Tiger's Den. In fact, it's on your members page. If you're a TFNN member, it's already on your page. Just go log into your page, click on the Den feed. You can see our charts in HD. Hey, if you're not a member, now's the time to do it. The easiest way, go to the homepage of TFNN.com, and here's what you do. Just go sign up for our virtual contest, our trading contest, our competition out there. It takes about 15 or 20 seconds. 15 or 20 seconds. That's all it takes. And then, boom, you will be seeing these charts in HD. You want to do that. So get over, sign up for it. You know, anybody who was sitting on the fence, just time to get off the fence right now. Let's go check out these markets here. Let's go see if the markets are sitting on the fence. Right now, we've got the Dow futures off about 13, S&P futures off about a point, trade out at 16.52, NASDAQ futures down a point and a half at 31.26. King dollar on the move. It's up 27 ticks right now, trading out at 82.47. Goldilocks flat. It's trading at $13.89. Silver flat, trading at $22.43. Light sweet crude, well, that's not flat. That's trading up 72 cents right now at $107.95. If we take a peek around the globe here, we can see that Europe is a mixed bag out here. You've got the FTSE up 29 and the DAX is down a point, so no big deal out there. Over in Asia last night, we had the Nikkei up 10, the Hang Seng up 271. That was up over a percent point, over 1% last night, and the Shanghai down 5, so a flat market out there. Our call-in number 877 927-6648. Let's start off by taking a look at the ES Mini out here. We had a couple of patterns. You know, for those folks in the den yesterday, was probably about 2:30, 3 o'clock, was posting a couple of different charts in there just to help folks out with any trading, any patterns that we're setting up. Right now, we're taking a look at the ES Mini, the 30-minute chart. Why? Because that is the EKG of the market that helps us to figure out the heartbeat of what's going on. We've got two patterns that have completed here. Two Gartley, one's a Gartley sell pattern. That would complete at 1657. So far, the high that we have seen came in at 4 o'clock this morning, was at 1656.50. In fact, 1560, yeah. So I'd say that's close enough to completing, wouldn't you? In fact, we got a little bearish engulfing candle that took place right after that. We also had this 1.272 butterfly pattern, and this completed here yesterday afternoon at about 2 p.m. Got a little bearish engulfing candle right after that as well. So we've got the confirmation of two patterns here, two normal sell patterns. Now, of course, yesterday's pattern, price was moving into where? And that relative strength indicator was moving into the extreme overbought condition. Now, here's the bullish side of these patterns. You can see that very little retracement has occurred thus far. So in other words, once this 1.272 butterfly, I'll go ahead and expand it up on my screen here. Once the smaller pattern here went ahead and completed, what we saw price do is basically just move sideways in order to work off that overbought condition. That, folks, is actually bullish out here. I do believe right now, though, we're getting a little signal here from the euro-yen that maybe what this market wants to do is retrace. And retrace to where? Well, if you just simply go from the A to D point, that would be your swing point low on this pattern. That came in at 3 o'clock in the afternoon on September the 3rd, and that low 1630.75. In this case here, let me just readjust a bit. Let's go from that low. I don't want to tell you one thing and do another. That would be crazy. So we're going to go from that low again, and we're going to take it all the way up to that high that came in at 4 o'clock this morning. What we will see here is the dead cat bounce, the 0.382 retracement, the minimum level that this pattern should pull back to is 1647 out there. Also, we can see sweet 618, and that would be normal, would be moved down to the 1641 level. Right now we're trading out at 1653, so we'll see how this plays out. Now, what's very important about any pattern that you trade out here, any pattern, is that you can learn as much from failure. In fact, you learn more from failure than you do from success. At least that's what I find out in life out here. So we've got two patterns that say that this 1657 should be a good short-term area where we should find some resistance. And if we don't, what is that a signal of? What would that be a signal of to you? Well, the signal would be to me is we've got some strong trending markets here, so that means we go take a look at the daily chart, get a figure, and try to get a feel for what's going on there. But before we do that, I'm going to switch over to our currency pair. That is the euro-yen out here. We've seen that. Actually, we'll take a look at the daily chart on that. But we've seen that move down quite a bit here during this 9 o'clock hours. We came to the 9 o'clock session. But we haven't seen futures do that much. So we'll see if this is going to paint the way for what we should see in the market, which is that pullback of those patterns that we just took a look at. And if the pullback is just normal, meaning no big volume, no big push down, we go back and take a look at those patterns. All we're going to really wait for is we're going to wait for the market. We're going to wait for the futures to get where? To get into that oversold territory, and likely they would be doing it right around the 1640 level. Then you'd wait for some type of bullish candle signal before you'd go ahead and pull the trigger and start heading north again. So now let's go back over. Let's take a look at the daily chart for the ES Mini. Let's go see what we've got going on here, because we've got some competing patterns here. Those competing patterns, take a look at that rising price channel. Oh, this is a rising price channel coming off of the lows from November 16th. Remember, you're using the largest number of co-located opens and closes. That means it doesn't matter whether it's an open or it's a closed candle session out here. In this case, we're using, in essence, the open of November 16th, and that price open was 1351.50 out there. Next open that I'm actually using out here is the open from June 26, 2013, and that was an open of about 15.80.25. That pretty much gives us our price channel line. What we can see here is that price broke through that area on August the 27th, and what took place yesterday is price closed right on that rising price channel. So price is trying to get back inside there, but we've got two competing patterns. We've got this descending price channel or a subcorrection channel. It's one or the other here. That is, these are the blue lines that you're looking at if you're watching us on TigerTV, or preferably right now you're watching us inside the Tiger's Den. And so this is the competing patterns that we've got. Price is right on the line. There's been no conviction one way or another at this moment. The conviction has been to the downside, that wide-ranging bar on August the 27th. So the daily chart right now, really, quite frankly, isn't helping us out, with the exception of one thing. What do we see here? We do see higher highs, and we do see higher lows out here as we just simply take a look at this grouping of candles. But price still not closing above that downtrend candle from August 27th. If we do get a close above 1655.50, price most certainly, I don't know if I can say that, but price ought to go ahead and pull up into the top of that descending price channel. And where's that at? That's really a good question. I would have to say, why don't we just take a look at some retracement levels? If we do that, let's take a look at the retracement level off of the August 14th high down to the low on August the 28th, and 1667 would seem to be the logical number. That would be the 0.618 retracement. Let's go see if we can find any convergence of Fibonacci numbers. Let's come up from the high out here on August the 5th, down to that same low on August 28th, see what we've got going on. So you'd have to say that 1667 is probably the number. What you can see here, let me go ahead and get rid of this one. What you can see also is coming off of the high down to the low. I didn't get rid of it, did I? Let me try that one more time there. Delete. There we go. So as we come off of the high here, which would be the August 5th high down to the low that was put in on August 28th, you can also see at 1655.50. That happens to be the 0.382 retracement. That's a 382 retracement, folks. That's all that the market has really done at this stage. It's made a dead cat bounce. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Before we went to break, we were taking a look at the currency market. And as you know, if you've been listening to the show for a while, that my favorite currency pair, because it's the one that tracks the U.S. markets the best, is the euro, Japanese yen. And so we were looking at the short-term chart. Now, when we take a look at, when I speak about what the market is doing, got to always make sure that you put it in context of the time frames that we're taking a look at, because on each time frame, it's going to give you a little bit different picture. And so you want to make sure that whatever it is that you're trading, you stay within that time frame. But you want to understand what's going on just above you and below you out here. Now, this is very key as we take a look at this chart. This is a daily chart for the euro, Japanese yen. The euro-Japanese yen has been making incredible Gartley buy, butterfly, buy, sell patterns out here. If we take a look at if we come over here to the very left-hand side, if you're watching us on TigerTV, you can see that there was a 1.618 butterfly buy, a sell pattern that was completing at about 131.32. And that completed on May 22nd when price got up to the 133.80 level, certainly within the target range out there. There was also a little bit of a butterfly sell, 1.272. A smaller pattern that completed. We can see here that price never really retraced. Remember when we were taking a look at the ES&P 30-minute chart, and we saw how that oversold condition just simply did not pull back. Overbought condition wasn't really pulling back, but just moving sideways. We saw the same thing out here with this nice little 1.272 butterfly sell pattern. Just simply moved sideways and moved up and completed the larger 1.618 butterfly sell, and then we saw the bears come in here. Nice little bearish engulfing candle on May 23rd. Now, why is that important? Well, what's important, as you can see along the way on the move up here, what you see is nothing really but bullish candlesticks out here. Now, what we're taking a look at, what's going on potentially right now, we can see that coming off of the most recent swing point high to low, where we're looking at is the August 23rd level, that high 132.41. From that high down to the low that was put in here on August 30th, that low is 129.29 out there. You can see from high to low what the market has done. It's made a 0.786 retracement. There's 3 retracement levels that you want to make sure that you're always aware of: 0.382, 0.618, 0.786. Well, as we take a look at the 0.382 level, quite frankly, on September the 2nd, The market sliced right through that 0.382 level, went right up to 0.618, said that move was not over and that it should go to the next level. Well, that's what it did yesterday. And yesterday it closed right at that 0.786 area. Unless there's a bearish candle that shows up today. What would be a bearish candle? Excellent question. That would be a close today below or right around 131.14 out there. That would be your bearish candle, and that would signal that the move upside is over. And that would also suggest to me that this pattern that I have drawn in here, this 1.272 butterfly, that in fact that would not take place. On the other hand, if we do not see a bearish candle, that's what's in place. The first thing that would be in place is the move here to the August 23rd swing point high. That's 132.41, and then it would move up to the 133.96-ish range out there. Why is that important? Because this currency pair tracks the U.S. market better than any other currency pair out there, and that means you've got to pay attention to it. Give you a case in point out here, because when you see divergence, boy, it is a huge signal as to what's going on inside the marketplace. So now we're going to take a look at a chart here that's got the Euro-Japanese yen on the upper portion or bottom portion. Let me find it out here first. Where is it? Euro-Japanese yen. It should be right in front of me. It should be right in front of me. Would be right there. It is right in front of me down the lower left. On the bottom portion of this chart, we've got the Euro-Japanese yen. The upper portion happens to be the S&P 500. Now, when you see divergence, the way that this pattern resolves itself is in the direction of the currency pair. And that's what this chart here is showing now. As we take a look at what's going on right now, I would really come back here to the time frame of about, I don't know what the date is exactly. It looks like right around August the 23rd, I'd say August the 23rd. And things right now are pretty much in sync. You can see the high on August 23rd and where the S&P finished. You can see you've got a downward slope. And the same thing that we have out here, if you take a look at the lower portion of the chart, the Euro-Japanese yen. This portion right here, you got the S&P 500. This is the cash index. So it hasn't opened yet. So we don't know if there's any kind of divergence. If the S&P 500 continues moving up and the Euro-Japanese yen does get that bearish pattern and it starts moving south, folks, I'm telling you that it is the best indicator out there for a signal of the direction of the markets. You want to always see this in sync. Now, this is not used for the determination of how far or the extent of a move. This is just simply a directional indicator out there. But I will tell you one thing. It is absolutely the best one to understand when there is divergence in place, because when there is divergence in place, it's going to resolve itself in the direction of the Euro-Japanese yen. 877-927-6648. Give us a call, folks. And, hey, get over right now. Do it during this break. Go sign up for our $10,000 virtual trading competition, because you only have about 2.5 hours to do it. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 12 points, trade out at 14,942. S&P up 2 at 1655. Composite up 6 at 3654. Russell 2000 up 1.5 at 1027. Apple up 75 cents. Microsoft back 12 pennies. Google up $3 and change. Leading the charge, the upside, it's Kadant Corp. KDN is the ticker symbol. SKF is going to acquire them, and looks like at about $35 a share or so, about a $1.25 billion deal out there. Netflix up behind them. They're up $5.55, up about 2%. Icky Bank, IBN, is the ticker symbol. They are not IBM as in Mary, but IBN as in Nancy, up about 11% right now, up $2.80. Costco Wholesale, that's up 2%, up 2.25. Fastenal, FAST, that's up $2. LinkedIn up a couple of bucks. HDFC Bank up $1.67. Cubist Pharmaceuticals up a couple of percent. Celgene, CELG up 1% right now. Let's see, largest percentage, no big, huge percentage gainers to the upside. To the downside, though, you've got Cons Inc., CONN, that's off 12% this morning. That's down about $8 and change. Baidu is off about 1%, down about $1.70. Zillow off $1.60 right now. You've got SAP, that's off about 2%. Tesla Motors down $1.81. Bazaar Voice, BV is the ticker symbol. They're down 11%, trading out at $9.93. Our call number 877-927-6648. Let's go check in on the metals markets out here. We've got Goldilocks. Gold giving us a little bearish reversal signal yesterday. We'll see if it has some follow through here today. A little bearish engulfing candle. You can see how this body, the body of yesterday, engulfed the entire session of the prior day. What it needs right now, it needs needs some follow through to the downside. Any close today below 1411.60 would be that signal out there. Now, you can see a number of squiggly lines on my screen. Had a few folks that sent me emails yesterday asking me why I was using the 8 and the 21-day exponential moving averages. You can see there's 4 moving averages on my screen, the 8, the 21, the 50, and the 200. Well, the 50 and the 200, that kind of goes without saying, kind of a normal set of moving averages that folks take a look at. Now, remember, moving averages are lagging indicators. They're never going to be able to give you the turn out there, but there's plenty of information that you can garner from them. Now, the 8 and the 21, here's the reason. You know that I am a big believer just simply by taking a look at all the stock charts that we do, by understanding Fibonacci expansion and contraction out there, right? We all know that, the 0.382, 0.618, 0.786 on the contraction side, 1.272, 1.618 as your primary targets on the expansion side. Well, I'll put up this little spreadsheet here. This is the Fibonacci summation series. It's a pretty easy math exercise out here. We'll put that up on TigerTV if you are watching. And most of you probably should now be watching on the Den because, you should be signing up for our TFNN $10,000 virtual trading competition. You got access to the Den here for the next couple weeks. You can see all our charts in HD. The Fibonacci summation numbers, it's very easy. You start off with 1, you add 1 and 1. That's how you start off. That gives you 2. Then take your 2 plus your prior number. So 2 plus 1, that's going to equal 3. 3 plus the prior number, that equals 5. 5 plus 3, that equals 8. 8 plus 5, you've got 13. 13 plus 8, 21. 21 plus 13 gives you 34. You see, once you get through about the 6th or 7th iteration out here, when you start doing your division going backwards, in this case here, taking your first number, in this case here, we'll take 2 divided by 3, that would equal 0.667. As you keep doing it, once you get down to about the 7th iteration, let's count them actually. You've got 1, 2, 3, 4, 5, 6th iteration down there. The numbers that repeat themselves, you continue to get 0.618. Well, you can see here when it comes to moving averages, you can see the numbers 3, the number 5, the number 8, the number 13, the number 21. I'm just simply using 8 and 21. Just simply following some of the summation. I could use 55 out there for sure, and instead of the 100-day moving average, could use 89. But what I'm paying attention to, or I could use 144, I could use 233 instead of 200 out there. You could use those. But what I'm paying attention to on the 50 and the 200 are what most technicians are going to look at. But that's the reason why I'm taking a look at the 8 and 21. Right now you can see that price is below that 8-day. Basil uses a 9-day. It really doesn't matter which one you use. You want to use the set that works for you. Now, what I'm really using these 4 moving averages for is I'm looking for these clusters. I'm really looking for clusters where these moving averages all join together, because it's at those clusters when it comes to the lagging indicator that I have found that it has got the most power, because the question is going to be which way does price explode when those 4 moving averages come together, because it gives you a huge piece of information. I can't tell you why it works, but what I can tell you is that it does work out there. And right now, we don't have that cluster, but what we do have is we've got that 8-day exponential moving average that is acting as a little bit of resistance inside Goldilocks. We'll see if we get some follow through to the downside. If we do, what does it mean? Excellent question. That's one I would be asking. And what it means is that you should see a pullback to about the 1336 level, even potentially 1276 out there. That would be your 0.618 retracement level. If we go take a look at high-ho silver, let's go see what's going on in silver. We're going to see the same type of chart out here. Now, you see the 200-period exponential moving average. That's that green line moving across the top. That has held silver in a check here really for quite some time. I mean, you pull this back, take a look at that cluster. If you don't think the cluster system works, and I won't finish that sentence there, but you can see that cluster system right out here during the trading session of February 8th, 2013, and when price exploded amongst that cluster, where was it headed to? To the downside. To the downside, folks. So we do not have a little rainbow convergence. I guess that's what I sometimes call it as well. A cluster, because, there's, anyways, rainbow convergence. That probably sounds a little bit better out there, and there's nothing you can add on to the back end of that. So if we take a look here, you've got the 200 period now we can't see also inside silver. You've got the 8-day exponential moving average that right now, just right now, only been for a day or so, where that is acting as a resistance point out there. So we'll see. In the case of silver, what would we expect as a pullback? Look, a normal dead cat bounce, a normal retracement takes you down to $22.47. Of course, sweet 618, and nothing would be wrong, $20.83. Can you imagine if silver pulls back to $20.83? Everybody is going to be just simply saying, you know what, the move in silver is over. Of course, what you're going to be doing is saying, no, the second move in silver is just about to begin. Of course, you're going to wait for some other signals out there. You don't just wait for price to get down to those levels. Those levels are what we use for planning. We use that for planning purposes, folks, and then we use other signals, other patterns to help us to get into a trade. If we take a look at light sweet crude, this thing has been traveling in a sideways consolidation ever since July 5th. It still is within inside that consolidation range, which is really from about 103 to 109. So maybe it's more of it's really about 102.50 to 109.50 out there. That's really our 7-point sideways consolidation range. No real, and in this case here, in the case of light sweet crude, what you want to do is you want to either play this from the upside at 109. If you've got the cojones out there at 109, you could go short and try to ride this thing down to about the 102 level. At this stage, though, the way that this is tracking to me, your better trade out here is to play it from about the 102 50-ish level to the upside out there. That seems to be the best trade. Now, the other way you can play it is a continuation move. Any break above 109.32, and no, this was not a break above it. This was a shooting star. The body is the essence of price here. The candlestick is nothing more than the extremes, the emotional extremes that you can see in any kind of a market out there. And so really, if you just take a look at the body, just still traveling with inside that sideways consolidation range. So that's on light sweet crude. Unfortunately, light sweet crude says it wants to get to the 114 level. That's because of this sideways consolidation that was in place here for over a year, and that was a 14-point consolidation. The breakout of that, which we did see take place, would take it right up to the 114-ish level. Remember, when you're taking a look at consolidations, the first target is nothing more. It's equal to or greater than the actual consolidation range where price would travel to, either to the upside or to the downside. In the case of bonds out here, that spells double trouble there, because if you take a look at that consolidation range, this is the one that goes all the way back to August of 2011. This consolidation range, it's been tested, it's been retested, and then tested one more time just to prove that, you know what, it's time to move on to the lower part of its range. The lower part of its range says it's going to get down into the 117 type level. That's quite a ways down. Right now, what we've got going on as we've got an A to B equals CD down that is being formed that'll take the 30-year Treasury into about the 128.09 type level. Right now you're at 129.12, and that is on the 30-year bond. If we take a look at natural gas out here, natural gas right now, boy, this thing has been just nice, steady move up here. It is just trading at or above the 0.786 retracement. That number would have been 368. It's at 369, so we'll call it trading right at that level. Trading, though, inside that bar, that swing point bar from July 18th. The low is 360. The high is 383. You know what that says, folks? That says it does want to get up to that 383 level up there and test that swing point high, make that 100% move of a move. Maybe then it actually goes ahead and it backs off. That is on light sweet crude. Let's go check in on some of the sectors within inside the S&P 500. Let's go see what we've got going on here in the energy sector. The energy sector, that has a confirmed A to B equals CD up. Your A point on this is going to be, this is the daily chart we're looking at, is the low on August 21st. And that low is 79.83. The B point on this is the August 26th level, 82.31. That's got 7.2 million shares. We can see that price careened through there on 11.9 million shares. That set up your 1-to-1. However, more likely a 1 to 1.272 A to B equals CD up. That would take you into the 84.17 range, and that at 84.17, that's going to come back and test the May 22nd high, 83.95. 19 million shares there. You can see price trading inside that swing point, and it's doing it on less volume because that had 19 million shares yesterday. You're up and inside that on 7.5 million shares. We're going to have light volume today as well. So it's going to go make that peak. It's going to go make that test, but it's going to likely do it on lighter volume. Nonetheless, it does have a confirmed A to B equals CD to the upside. If we take a look here at the health sector, the XLV, that is the number 3 weighting with inside the S&P 500, if I'm not mistaken. The XLV, even though it's number 3 weighting with inside the S&P 500, is struggling right now today, trying to get inside that downdraft that was created in it on August the 15th. It was down on 6.5 million shares. Yesterday, it was up on 4 million shares. So it's trying to close the gap. A closing of the gap would take it to the lows of $50.46 out there. If we take a look at retracements from its high, the little doji candle on August the 1st. Oh, I got to grab the right tool. That'll make it a little bit easier for you to watch. If we take a look at that doji high all the way down to the low on August 28th, what we'll see is the sweet 618 level is $50.48. That, too, will go ahead and then close the gap, which is $50.46 out there. Once it does that, we'll just have to gauge the volume. Again, the volume here of the breakout session is 5.8 million shares. The actual breakdown, I should say, 6.5 million shares. So that is on the XLV, and it's going to be important to watch that because that is the second weighting with inside the S&P 500. Let's go. I'm the third weighting with inside the S&P 500. The number one weighting, of course, that is the XLK. That is the technology sector. So let's go see what that technology sector is doing. It is closing the gap as we speak, or trying to. The low of that gap, August 26th, that's a price point of $31.91. Right now it's at $31.85. That had gapped down with 6.8 million shares yesterday into the gap with 7 million shares. Something to think about. So the XLK closing the gap with volume out there. What does that set up? That sets up a run to the area that is the next resistance point. The next resistance point is actually the gap down from August the 15th. And that area right around the 3205 mark. So it looks like the XLK headed towards that area. Of course, we can see here during this little market correction, the Dow has been the laggard. That has gotten down and tested the June 24th area. But the XLK, that is been nothing but strong. No real retracement down there inside the technology sector of the S&P 500. Let's take a look at that number two weighting, and that would be the financial sector, the XLF. Let's go see what she is doing out here. The XLF is inside the old gap-a-rooney. That's a gap that was created here on August the 27th. Gap down with 72 million shares. Yesterday, trying to get over into that gap and on really light volume, 31 million shares. Nonetheless, we're going to see light volume. You can expect that for the next several days anyway. So let's just pay attention to what it's doing. It's inside the gap. It wants to at least close it. It wants to get up to 1993. It's trading at 1983, so it should have no problem doing that at this stage. Now, the XLF, the number two weighting inside of the S&P 500 here, sector, I should say. This has really been in a had a nice 1.272 butterfly pattern out here, actually completed on July 22nd, and really it did its work, right? When you take a look at this pattern, which it did complete, the normal movement is back to where? Good old sweet 618. Remember, we're using these as target areas, not as exact numbers. 1948 was the exact number. The actual low that we saw coming in August 28th out here was 1935. Pretty darn good stuff, isn't it, folks? Just like you. 877-927-6648. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 42, S&P is up 5, Composite up 13, Russell 2000 up 37 points. Switch over here and take a look at what's going on around the world. Let's take a look here at the FTSE. Now, the FTSE right now traveling out at 65.19. The FTSE created this hammer candle. It's got 2 hammer candles down at its lows. The first one was created down on August the 20th. The low there was 63.98.63. It closed slightly below that on August 21st. That was spelling double trouble, but boy, the Bulls came right in and save that on the very next trading session. Now, another hammer candle was formed really at that same level, August 28th out there at 63.93. Clearly, on the daily chart, we can see where the bulls are hanging out here. Now, what is price going to do? Price, in this case here, wants to run up to the top of this descending price channel that it has now formed. And this is coming off of the session from May 23rd out there. I'm using the open of 68.39 as my first touch point. Now, this really would pretty much extend back to the close on May 22nd as well. But that to me at this stage looks like the price channel along the top as well as the price channel along the bottom out here. That says that this could easily, if we take a look at retracement levels, it'll probably factor into about a 0.618 retracement area as far as where it wants to travel to, which would be about the 65.79 range. It's at 65.21. So looks like the FTSE might have another, about 50 points or so to go to the upside. We take a look at the Nikkei out here. Nikkei was, up maybe just a few points last night. The Nikkei was actually, The Nikkei was up 10 points last night, 11 points out here. And we do see two patterns. It looks like this shorter-term pattern here is what is playing out in the marketplace. You can see prices above the 0.382. And this was, by the way, a Gertley buy pattern out here, 0.618. Gertley buy pattern. Says that price should now move up to 14,279. As its next move. If it can get above that, then 14,575 would be on the way. On the way up here, no bearish candle yesterday for sure. We did see one that occurred, and this was on August 30th, and that was immediately not confirmed on the very next trading session as the Nikkei had gapped up. So we'll see if all this is doing is forming a new A to B equals CD down. And what would that look like? Remember, the ultimate of any Gertley pattern is that it forms a new A to B equals CD. Well, in this case here, if this could be forming an A to B equals CD down, that would look maybe something like this. Maybe it looks something more like this. That would be the beauty of it. So the beauty would be it would move up to about 14,575 and then do a 1 to 1.618, A to B equals CD down. That would set up the larger Gertley buy, and that is on the Nikkei out there. So in advance, we can use these tools to really help us plan for what may occur, and then you're just sitting back, and waiting for these patterns to complete, and then you go ahead and you fire away. And that is on the Nikkei. Now, let's take a look here at the New York Stock Exchange. Right now, the New York Stock Exchange is up 28 points. It is participating in this move higher, so it's not truly lagging. If I take a look around, let me go over to another spreadsheet over here. Didn't mean to throw that one up there. The bulls, by the way, they did take control of the market. We had enough market breadth yesterday, so the oscillator moved above zero. If there today is net declining issues, net declining. In the past we've been looking at net advancing. If there is net declining issues of about 678 or more today, guess what? It'll be an immediate fumble. The Bulls have the ball. They're at basically first and 10. We're going to put them on about the 5-yard line out here. So today is the first day of a play that they're running. But if there is a minus, thank you, Angie in the den, if there is minus 678 today, then it will be a cataclysmic failure out there because they will have fumbled the ball on about the 5-yard line. And you know what the Bulls or what the Bears would like to do then? They would like to go ahead and score. Folks, if you're off to start your Thursday, have a terrific Thursday. But first, before you do that, get over to the homepage at TFNN.com. Sign up for our $10,000 competition out there. You got to do it by 12 noon. 12:01 doesn't work. Have a great day, folks. Look forward to seeing you soon. Take care now. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.